Greetings, members one and all of the Salivation Nation. It's been quite an exciting run for gold over the past few days, and somewhat with silver. We'll talk about both metals here. But gold prices, they surged to a 6-year high of $1,415 and then backed off a bit. This comes to us from Kitco News, Jim Wyckoff. Gold prices are now trading around steady levels in the early morning U.S. trading Friday after pushing to a 6-year high of $1,415.40 in August futures in overnight trading. Silver prices hit a nearly 3-month high overnight. Safe haven demand heading into a very uncertain weekend is featured in the precious metals market. Also, metals bulls are still feeling the positive effect of the Federal Reserve and European Central Bank leaning to easier monetary policies this week. August gold futures were last up 60 cents an ounce at $1,397.40. July COMEX silver prices were last down about 14 cents at $15.34 an ounce. The U.S.-Iranian confrontation in the Persian Gulf region has escalated this week with the shooting down of a U.S. drone by Iran. President Trump has appeared to downplay the situation by saying the downing of the drone could have been a mistake by Iran's military without orders from on high. In other words, the mullahs or the president. Report overnight said that the U.S. was planning a retaliatory strike, but the mission was called off. The report also said the U.S. strikes against Iran remain on the table. And really, he's getting pressure that there's got to be some action taken, but more than likely, he probably will try to take an action, military action that won't involve lives. He could do an EMP attack over some of their military facilities. Who knows? We'll see what happens. It also says the matter will likely intensify before it plays out. Traders in some markets are likely to even up their positions heading into the weekend on worry U.S. warships and warplanes could attack Iran's military. The marketplace is still basking in the easy money stances taken by the Federal Reserve and European Central Bank this week. Stock markets have rallied, government bond yields have dropped, and so has the U.S. dollar. Commodities have been given a shot of adrenaline ideas. More money in the financial system will mean more consumer demand for commodities. Asian and European stock markets were flat to mixed overnight, pausing from gains seen this week. U.S. stock indexes are pointed towards weaker openings when the New York day sessions begins, on corrective pullbacks from this week's solid gains that have prices at near record highs. So yeah, it's definitely been a crazy stock market for sure. In overnight news, the Eurozone composite purchases managers PMI came in at 52.1 in June, which is better than the expectations of 51.8. A reading above 50 suggests expansion. However, the German manufacturing PMI came in at 45.4. The German economy is the strongest of the Eurozone. So that's kind of the worrisome for the rest of the countries involved. The key outside markets today sees NYMEX crude oil prices higher and trading at just at $57.65 a barrel, $57.65. Meanwhile, the U.S. dollar index is slightly lower as the greenback bulls are in trouble after the week's drubbing of the USDX. This is also bullish for the metals markets. U.S. economic data due for release Friday includes the U.S. flash marketing PMI, the services PMI, existing home sales, and the Federal Reserve releases stress test results from U.S. banks. As you can see, here's a chart of 24-hour gold price there. Look at that. It's trading way up there. Crazy. Technically, the gold bulls have the solid overall near-market technical advantage and gain still more power today. Prices are in the accelerating 7-week-old uptrend of the daily bar charts. Bulls' next upside price objective is to produce a close in August futures above solid resistance at $1,450. Bears' next term downside price breakout objective is pushing August future prices below Solid technical support at $1,361.50. First resistance is seen at today's high of $1,415.40, then at $1,425. First support is seen at today's low of $1,386.10, then at $1,375. So, yeah, and then there's silver price there. We can see it's the July silver future bulls have the overall near-term technical advantage. Prices are in a 3-week-old uptrend on the daily bar chart. Silver Bull's next upside price breakout objective is closing prices above solid technical resistance at $16 an ounce. The next downside price breakout objective for the bears is closing prices below solid support at $14.62. First resistance is seen at the overnight high of $15.55 and then at $15.73. Next support is seen at Thursday's low of $15.12, then at $15. Market rating is 6, and we'll see how this all plays out. We can see here at the top, the ticker shows silver falling there, and gold up just below that $1,400 level. Platinum is up $1, and palladium is up $17. Now, I think the thing to consider here is, what is silver doing? You know, silver is actually now pulled back there, and you have to wonder if the price movement with silver is moving along with commodities, because it said here in the article that the commodities kind of went up as well a little bit too, or if it's being recognized as a hedge. And I do believe there's some at play there with that as well. So that's going to be the thing to kind of consider and see what's going to happen. Now, there are many of us who feel that, well, you know, this could just be short-lived for gold too, and it could back off even more next week. And, you know, we talk about baked in. You know, I mentioned that when I was under the impression that some of the baked in movement was because of what the Fed has been hinting at for quite some time. And, you know, we'll see what happens. You know, the Fed will probably cut rates. And there's been some talk, if they do cut rates, that could be the beginning of the end of this market. And we could that could be a sign of a recession. We get another sign. We have the yield curve index there, or the yield inversion. And that inversion of the yield could possibly be the another sign. Of course, we have to see what GDP does. A lot of these numbers kind of be revised backwards, but my guess is probably if it does happen, it won't be till next year, and would probably have to take a couple of those rates being cut down. But nonetheless, it's we'll see how things play out. But silver is an interesting anomaly because it's not making the moves that gold has been making here lately, but typically it does. But I think if the prices continue to go up for gold, that silver will follow, and people will see that as a hedge, as well as the commodity that it is. And we'll just see how it plays out. The fact that it's staying here above $15, a healthy margin above $15 at least right now. It did drop a bit. It's the only one of the metals that dropped of the four here, the big four. I think that's kind of a telling sign. Also, we shall see. But it's going to be interesting to see how this plays out as next week does happen. And what will happen if there is military action against Iran, even if it's not something that involves no deaths. Let's say they take out a runway. Let's say they take out a port. And there's no deaths. I believe that will certainly escalate some things. I think they are expecting some sort of response. And some sort of military response. Certainly the sanctions will be tightening even more on them, and they're already under a lot of pressure in that regard. And so those are going to be the next big thing. If oil prices continue to go up, I believe that will reflect on silver and gold as well. So it's anybody's. I think that probably now on we can probably make a safe bet that the lows that we saw prior to this big uptick in prices, we probably won't get back to this year. I believe there's going to be enough tension. There's enough uncertainty. The trade is continuing to hound us. What's going to happen with trade? People are tired that there's no deal occurring, and I think that's going to cause some issues. We'll see what happens at the G20. And so there's a lot of things, a lot of uncertainties here that need to be worked out before we can see any stabilization, in my view, of prices. But with good economic data continuing to come out too, that kind of works on the other direction. And so we have to keep in mind, I think that's part of the reason why we're seeing silver kind of being tepid in its movement, because it is seen a lot as a commodity. But if we see real sustainable growth in the prices of precious metals, I believe silver will catch up. When I say catch up, I mean narrow a bit that ratio between gold and silver. Not as much as some people think it should, but I think it will squeeze in maybe even to the mid-80s. But, we'll see what happens to where that goes. But typically the ratio does tighten as we see the metals go up because silver is more volatile. In this case, gold has been more volatile in the upwards direction. So go figure. Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, share, comment, and subscribe.